One missing year on your Social Security record could lower your check for the rest of your life. Yet millions of hardworking individuals in our middle-class community never think to check it. Many families assume their lifetime earnings statements are always processed with absolute computer precision. That blind trust is costing our neighborhood real money during this historic wave of soaring prices. The system is forcing the middle class into a quiet financial gray zone where public aid is completely denied. Our families are considered too wealthy for social welfare, but too poor to fight these rising costs alone. The administrative gaps inside official government databases are leaving substantial amounts of cash on the table. The Social Security Administration will never call you to fix these deep historical errors on their own. This urgent analysis breaks down 5 severe procedural traps and provides the exact self-defense steps. Saving this presentation and sharing it with our elderly neighbors helps protect their hard-earned financial rights. Understanding how the system calculates your benefits reveals why these massive gaps occur so frequently. The retirement check is strictly calculated from the 35 highest earning years of your working life. The government takes those 35 peak years and adjusts the old numbers to match current inflation. If a worker has fewer than 35 years on record, the system fills the blanks with flat zeros. 1 zero matters. 1 missing year matters. According to official agency data, just 1 missing year of recorded income slashes your check permanently. The system automatically deducts approximately $100 from your monthly payment for every single zero. That hidden error adds up to $1,200 of lost income every single year of your retirement. Over a 20-year retirement, that single bureaucratic gap cost your family $24,000 in total. Do not assume the record is correct. Check it yourself, because the system will not warn you when your money starts slipping away into the bureaucracy. Trap number 1 covers the widespread payroll errors from the 1980s and 1990s. This specific problem affects the largest number of older citizens who are currently receiving benefits. During those decades, all payroll processing relied completely on slow and faulty manual data entry. Private employers mailed paper forms to the Internal Revenue Service, which then transferred data to Social Security. At every single link of that long paper chain, numbers were inverted and names misspelled constantly. Imagine a citizen earning $30,000 in 1994, but a typographical error turns it into 0. Entire years of hard work vanished completely because a physical form was lost or misfiled permanently. The further back in time you go, the harder it is to track down these official mistakes. Millions of those manual errors were never caught and are ruining family budgets at this exact moment. To spot this trap, you must open your personal statement at the official Social Security website immediately. Compare what the government statement displays against any physical tax records your family still holds. Look closely for years where the reported amount is significantly lower than what you actually earned. Pay immediate attention to any year that displays a flat 0, even though you were working full-time. If you find a discrepancy, you must file Form 78 for correction of earnings history. This specific form is available completely free of charge on the official government web portal. You must attach your supporting documentation, like an old tax return, to prove your true historical wages. Processing these corrections through the local office usually takes between 10 and 90 days. Once the system updates, your monthly check increases permanently for the rest of your life. This next trap hits women especially hard. Trap number 2 punishes people who left the workforce to raise their children. This segment of our community is most consistently hurt by the devastating 0-year calculation problem. When a parent leaves a job to care for family, those years produce absolutely no official recorded earnings. If a mother accumulated fewer than 35 working years before claiming each year away counts as 0. A woman who worked 25 years and raised children for 10 years faces 10 zeros in her calculation. Those 10 empty gaps pull her average benefit down dramatically compared to continuous, lifelong workers. If this applies to your family, you must look for two critical legal exceptions right now. First, if you return to work later and earned a higher income, those stronger years replace the old zeros. The system is legally required to recalculate the top 35 years to reflect your higher lifetime value. Second, if you are currently receiving benefits and still working part-time, the system must review your record. The agency is supposed to automatically recalculate your benefit and pay the increase retroactively each January. If your check has not increased, it means the bureaucracy is lagging behind its official schedule. Now, self-employed workers need to pay close attention to our third major warning. Trap number 3 directly threatens independent contractors, freelancers, and small business owners. This rapidly growing segment of our workforce faces a unique earnings record nightmare every single year. Traditional employers handle all payroll reporting details directly with the Internal Revenue Service. Self-employed entrepreneurs must handle their own taxes and report every dollar of net income. Historically, a massive percentage of self-employed individuals filed their complex schedules incorrectly or skipped years. The harsh result is a government record that shows only a tiny fraction of what you actually made. If you operated a small business during the past decades, you must audit your online records immediately. Compare your official Social Security history against your old federal tax returns, line by line. In the year 2026, the self-employment tax threshold that triggers work credits is $1,890. You earn exactly one credit for each $1,890 of net earnings, up to 4 credits annually. Skipping a proper tax filing means entering a devastating year of absolute zero into your lifetime record. File your schedules every single year to ensure your independent work builds a strong retirement foundation. The fourth trap is not about old records. It is about people still working today. Trap number 4 directly targets seniors who continue working after officially claiming their retirement benefits. This is one of the most frequently overlooked financial opportunities for elderly citizens in our nation. If you choose to work while receiving checks, your new earnings are still tracked by the government. Every single year, the system compares your current income against your lowest historical data points. If your new year of work is stronger than your lowest past year, the old data drops off completely. Your monthly benefit is then recalculated upward to provide a larger permanent payout going forward. This automatic system recalculation is plagued by extreme administrative backlogs and constant software delays. Many eligible seniors never see this extra money reflected in their monthly bank deposits. You must log into your secure online profile to verify that your recent earnings are actually showing up. If the data is accurate, but your monthly check remains flat, the system is stuck in a bureaucratic jam. And the fifth trap is often completely missed by our military veterans. Trap number 5 affects veterans who proudly served on active duty between 1957 and 2001. Special military service wage credits exist to add extra value to the records of our brave service members. For most veterans who served between 1978 and 2001, extra credits are added automatically. The system adds $100 in credited earnings for every $300 earned in active duty pay. This special bonus allows an extra credit of up to $1,200 per year of active service. For older service between 1957 and 1977, the credit is $300 per quarter. A vast majority of veterans have never checked if these special military credits were properly applied to their records. If the historical numbers look suspiciously low, you must contact the agency to demand your military wage credits. Our collective defense requires every household to execute a strict financial audit starting today. Go to the official government portal immediately and log into your personal, secure Social Security account. Open your complete earnings statement and perform a meticulous year-by-year review of your entire working history. Identify every single year that displays zero income despite your active employment during that specific time frame. Gather every scrap of old tax documentation or vintage corporate forms to build your legal case. Download Form 78 directly from the web portal and submit your proof to force a manual recalculation. Tonight, open your Social Security statement. If one working year shows 0, do not ignore it. If the federal phone lines are completely jammed, you can bypass the hold times by filing your documents online. You can also visit your local county office in person to submit your physical proof directly to an agent. Do not let the complex administrative process intimidate you into giving up your rightful lifetime income. Every permanent correction of a historical error protects your family and secures your budget for the future. Before you leave, save this video and share it with someone who has worked for decades but never checked their record. Please subscribe to this collective platform right now to receive immediate warnings about breaking regulatory changes. When the federal rules change, the government will never send a personal representative to explain your options. Our organized group discovers these hidden structural shifts long before the money slips away into the bureaucracy. Take control of your history today, because defending your earnings record is the ultimate self-defense for your retirement.